It's been a long time coming, but the Eurozone leaders have taken the first firm steps towards a solution to the bloc's problems. Let's hear what they had to say.
It also includes a voluntary contribution by private creditors who had lent to Greece. It was agreed by them tonight and amounts to a nominal discount of 50% of notional Greek debt.
We have agreed to endorse two options for leveraging the FSF. Together, these will allow us to more effectively prevent contagion. I have long insisted on the necessity to equip the FSF with adequate flexibility and resources, so I'm particularly pleased with this decision.
We foster confidence in the European banking sector. We approved a coordinated scheme to recapitalize banks across Europe. The ratio of the highest quality capital will be increased to 9%. This will enable the banks to withstand shocks, important in the current exceptional circumstances, of course.
That's a result of a marathon session of negotiation between EU leaders. But what does this mean for the currency market? Sebastien Galy is a senior FX strategist at Societe Generale and joins me now. Sebastien, the euro got a bump after the announcement was made. Do you expect it to go much higher?
Yeah, we actually expect it to go in the region of 141 to 142. The key break was around 139.50. We're heading for the next retracement level, which is below 141. I think around 140.50, if I'm not mistaken, in that direction. And we expect that to continue. We have a strong relief on in terms of credit risk. That is, euro as a credit risk premium. You've seen financials outperform very strongly, including, for example, stocks of French financials have performed very, very well. And the euro dollar is getting bid. At the same time, you have a lot of interest from sovereign wealth funds, whether it's Russia or probably China, building up their euro holdings in terms of cash that they can then invest in the EFSF, which suggests that euro dollar will continue to be well performing because they need to sell dollars and to buy euros. At the same time, as there's a lot of money probably right now flowing into Asia, some of that money is dollar-based in a sense and is going to be reinvested also in the euro by these central banks. So that should continue to give it quite a decent bit going forward. It's not necessarily the best currency you want to be in, but it does suggest that we've broken away from the previous range to a more normal trading range, which is above 140 and up to 147.
We've seen a lot of money flow into the dollar in recent weeks, but will we now see a reversal of that trend?
Yes, and you can see that through already through Asian currencies, which are performing quite decently at this point in time. So if I look at what do we call the highest betas and the most risk-sensitive currency in Asia, which is Korean won, it has dropped impressively overnight, and indicating that there is a brutal move of a FX going into Asia, whether it's in equities, whether it's in local bonds, and it has tremendous impact on the price in these currencies because the volume is actually relatively low normally, and so the currency cannot absorb that much. That means there's a very, very strong move. So we move roughly from 11.30 to 11.18 in dollar Korea, which is about 2/3 of the biggest move we've seen in dollar Korea in many, many, many months.
A number of investment notes I read this morning said Scandinavian and commodity currencies would be the big beneficiaries of this announcement. Is this a view that you share?
Yeah, that's so. If you have a big event, essentially a big risk, which suddenly disappears, at least for all intents and purposes, it seems to disappear. Of course, we were just in basically one of the many episodes related to Europe, but the worst is basically gone by for us. That means that the market is able to look forward and say, well, if that risk is gone, the odds of a double dip, of course, are much lower. The odds that I am able to anticipate a recovery in Asia, in recovery in the U.S., and recovery in Europe has significantly increased. Now, in the U.S., you can see signs of it. In Asia, you can see that already inflation is fading lower, which is very reassuring. And in the case of Europe, not yet, but things are not as bad as people expect. And once you can peer through that trough in global growth, and normally risky assets perform very well. This is a time when you want to be long equities and short well, to some extent, bonds, at least in relative terms, and that correlates very well with commodities. They do perform very well. There's a lot of liquidity, and consequently, that is basically a pretty one-sided bet. Now, we've had that view for quite a while, so we're happy that it's continuing to pan through, and it is, quote-unquote exciting. Eventually, we will overbuy in the Aussie and the CAD, but it is not yet the case. So Aussie dollar still has a bit more to go, and then dollar CAD particularly has better to perform on the downside. And if you look at other commodities which are related to this, at least in the case of the Canadian dollar and Mexican peso, it has actually a lot of way to go still on the spot side. If we look at the Scandies, similarly to Australia, are quite sensitive to what we call capex. So essentially, the investment process, the global investment process. If you can imagine that the trough can be dissipated in global growth, then that capex story will, to some extent, come back, and therefore, countries like Sweden would outperform. So we've seen the Swedish equity market rally. It's been one of the worst performers, and it is rallying quite strongly. And it is a good leading indicator for what's going to happen to Sweden and the Swedish krona, irrespective of the central bank, which is a bit on the dovish side. And we should see basically Eurostocki break away from its range and probably head for its previous low. It may take a few weeks, but maybe not so long, and that would be the 8.9 level.
This obviously isn't the end solution, so can we expect these wild swings in risk sentiment to continue?
Smaller swings. It's pretty obvious that we will get some negative announcement coming forward. People essentially want to get a little bit of reputation. That means if they can basically make themselves heard, they will try to do so. Whether it's going to come from a rating agency or different actors trying to not stop the process but make themselves a little bit famous, it's very likely to be coming through. I guess in the coming days. So that's what you have to be prudent, but we're still in a momentum trade at this point in time. We will get squeezed at one point, but not too badly. The swings, the up and down swings of the wild addictness that we have globally are probably going to start to fade to more manageable levels.
Sebastien Galy there with some real quality insight, and we'll keep you informed on the FX markets here on Dukes Copy TV. But for now, goodbye.